18 days. That is all the time left before China does something it has never done before. And it could reshape global power for the next 50 years. In 1971, Richard Nixon cut the dollar loose from gold and rewrote the monetary rules for the next half century. On June 24, 2026, China quietly made its own version of that moment. 4 of its largest banks, ICBC, the world's biggest by assets, Postal Savings Bank, Ping An Bank, and China Guangfa Bank, announced they are cutting off retail gold trading for good. Here's the part that should stop you cold. While millions of ordinary Chinese citizens count down to losing access, China's own central bank has spent the last 19 months buying gold faster than at any point in over a decade. A government does not lock its own people out of an asset it is secretly stockpiling, not without a bigger plan. In 18 days, we find out what that plan really is. And if you're watching this right now, you're already ahead of 99% of people who will be blindsided when the deadline hits. This channel breaks down the moves governments hope you never notice, before they land, not after. To be clear, this is analysis built from public data, but when you line up the dates and follow the money, the pattern speaks for itself. In the next few minutes, you'll see the full timeline, the evidence, and exactly what happens the moment that 18-day clock hits zero. Subscribe if you want to catch moves like this before they hit the headlines. Let's start the clock. Let's get the dates straight, because the timing is the entire story. On June 24th to 25th, 2026, ICBC, the single largest bank on Earth by total assets, announced that every retail client holding gold would lose access to their account after July 24th. Postal Savings Bank of China said the same thing. Then Ping An Bank, then China Guangfa Bank. 4 of the biggest financial institutions on the planet moving together on the same day. But the accounts did not close on June 24th. They close on July 24th, 2026, 18 days from today. The announcement already happened. The execution has not. That gap is not an accident. It is a countdown. Before any of this was even announced, the banks had quietly raised the margin requirement to 140%. For every single dollar of gold you wanted to trade, you needed $140 in collateral. You were paying the bank more than the trade itself was worth, a record high. Why raise the cost first, then set a hard deadline 18 days out? Because 6 months earlier, something catastrophic happened. January 2026, gold hits an all-time record of $5,600 an ounce. Millions of ordinary Chinese citizens go all in on leveraged gold trading, certain it will only climb higher. Then it crashes, down below $4,000, a 30% collapse in months. Margin calls hit like a wave. Savings vanish overnight. And it was right after that collapse that the shutdown got announced, with a built-in 18-day fuse burning down to July 24th. But here is where the timeline gets strange. Because while China's citizens count down to lockout, someone else has been counting up. So what does China actually say its reason is? The official line is simple: protection. Gold had become too dangerous, too volatile, swinging from $5,600 down to $4,000 in a matter of months. Leverage made it worse. When the price turned, entire life savings disappeared in hours, not years. Factory workers, retirees, office employees, millions of ordinary people wiped out because they never fully understood what leverage could do to them. From that angle, stepping in sounds almost noble. a government protecting its people from their own worst financial instincts. The 140% margin rule fits the same story. Push the cost high enough, and only serious professional traders stick around. Everyone else gets priced out. The gambling stops. The public is shielded. On paper, this holds together perfectly. It is the kind of explanation most people hear once and simply accept. That explanation works. Right up until you check what China's central bank was doing this entire time. While the countdown to July 24th keeps running, look at what China's other hand is doing. The People's Bank of China has bought gold every single month for 19 months straight, the longest unbroken buying streak since it started publishing these numbers in 2015. In May 2026 alone, it added nearly 10 tons, and the pace has been accelerating, not slowing, hitting its highest monthly level in 16 months. Line the dates up. June 24th to 25th, the shutdown is announced. July 24th, it takes effect. And underneath both of those dates, without a single pause, sits a government buying more physical gold than it has in over a decade. Financial analysts note that stripping retail speculation out of the Shanghai Gold Exchange, which handles 75% of all physical gold trading on Earth, pushes that exchange toward pure physical delivery. Less noise, less panic, a cleaner number for what gold is actually worth. This was never about protection. This is market structure. This is repositioning, timed to the day. Around an 18-day countdown China set for itself. Here is what almost nobody understands about how gold markets actually work. There is physical gold and there is paper gold. They are not the same thing. And the difference is where all the power hides. Picture one gold bar, real, sitting in a vault. Now picture a certificate that says whoever holds this paper owns that bar. You sell it. The buyer never comes to collect the actual gold, so you write a second certificate, then a third, then 10. 10 people now believe they own that bar. There is still only one bar in the vault. The market sees 10 certificates and prices gold as if it were abundant. In reality, it is not. This is paper gold. How Western markets have priced gold for decades, off paper claims that mostly never get delivered. Remove the paper, force physical delivery, and the price has to reflect what is actually real, not what is written down, what is sitting in the vault. This is exactly what China is doing, 18 days before its own deadline. Control physical delivery, and you control price discovery. Right now, London and New York set the world's gold price. China is moving to take that away from them. This was never about protecting traders. It is about power. So does the evidence actually back this up? Every data point says yes, and it keeps getting bigger. 1. 19 consecutive months of central bank gold buying. Not a single month missed. The longest streak on record since 2015. 2. Central banks worldwide bought 244 tons of gold in the first quarter of 2026 alone, a record quarter, and most of it was never officially disclosed. 3. China is physically building for this. The Shanghai-Hong Kong gold clearing system is under construction right now, scaling Hong Kong's vault capacity from 200 tons to 2,000 tons, a tenfold expansion. Nobody builds a vault 10 times larger for no reason. 4. China's gold reserves still sit at only 9% of its total holdings. The global average for major central banks is 15 to 20%. China is deliberately below average, which means this is nowhere near finished. 19 months, a record quarter, underreported purchases, a tenfold vault expansion. Reserves still below average. Every single signal points the same direction at the same time. This has all happened once before. And when it happened, it rewrote the rules of money for 55 straight years. Go back 55 years to 1971, to the moment America changed the entire world in a single decision. Until then, the US dollar was tied to physical gold. You could exchange dollars for actual bars at a fixed rate. Richard Nixon closed that gold window. From that point on, the dollar was backed by nothing but a promise. And that single decision gave America the power to print money without physical limits, turning the dollar into the tool every country on earth had to hold, just to trade, just to function. For 55 years, that system held. Now China is running it in reverse, not cutting ties to gold, anchoring to it, building the infrastructure, buying at record pace, quietly tying its currency to something that cannot simply be printed. China is not going backward, it is building forward, using the exact same playbook America wrote in the opposite direction. If history rhymes even once, the number on the other side of this could be staggering. So what happens the moment the countdown hits zero? JP Morgan expects gold at $6,000 an ounce by year end. Goldman Sachs forecasts $4,900 to $5,400. Bank of America has flagged $8,000 by 2027 in an extreme scenario. These are not fringe predictions. These are the biggest banks on Wall Street running the math on a market that is about to lose its loudest, most chaotic voice, retail speculation, and hand the microphone to central banks instead. Once the shutdown lands, the noise disappears. What is left is systematic buying, a cleaner market, and a stronger floor under every future price move. That is a structural challenge aimed directly at the dollar's decades-long grip on global trust. 18 days. That is all that is left before we find out how far this actually goes. Here's a sequence laid out plainly. June 24th to 25th, China announces the shutdown. Every single day since, China's central bank keeps buying gold at a pace it has not touched in years. July 24th, it becomes real. 2 tracks, 1 plan, 1 deadline China set for itself. Strip out the retail noise, and what is left is a gold market run by institutions, a Shanghai exchange pricing real physical metal, and a yuan quietly anchored to something no government can print. That is a direct challenge to 55 years of dollar dominance. You are watching this shift happen before the deadline even arrives. The evidence is already public. The moves are already being made. The clock is already running. If you want to see what happens when it hits zero and stay ahead of the mainstream, subscribe now and turn on notifications. This channel will be covering July 24th in real time, with updates you won't get anywhere else. Comment below. Do you think this is the beginning of the end for dollar dominance? Drop D-dollar if yes, or stacking if you're already positioning in gold. I read every comment, and your answers help shape the next videos. Hit like if this opened your eyes to what's coming. Share this with one person who still thinks the dollar cannot be challenged. They need to see this before July 24th. Next, what the United States is quietly building to counter this exact move, and why it might already be too late to stop it. See you in the next one.